is Fintech Takes, the podcast keeping you in the loop on all the latest fintech trends, news, and ideas. I'm Alex Johnson, creator of the Fintech Takes newsletter, your host and self-confessed fintech nerd. Let's go! I know that here on the show we talk a lot about the importance of bank partnerships when it comes to the success of any type of embedded finance or fintech endeavor. So let me tell you about a provider that is raising the bar in embedded finance. Built by Fifth Third Bank, Newline enables enterprises to launch and scale payment products using their API-first platform, enabling embedded solutions that scale responsibly. Learn more about Newline by visiting newline53.com. Hello, and welcome back to the Fintech Takes podcast. This is a very special guest edition. I am delighted to have one of my all-time favorite people in fintech and the people's favorite guest, a returning guest now to the Fintech Takes podcast, Nina Mohanty. Nina, thank you for coming back.
Thank you so much for having me. I didn't realize I was a fan favorite, but
I got great feedback. I got
very
great feedback
touched.
the last time you came on, and I just love talking about fintech stuff generally with you. I find you're one of the people I can just sort of like send a message to and go, "Hey, what is going on here? Like, what is this?" And just like with
Yeah.
no context, and it can be anything, and it's like, yeah, this doesn't make any sense to me. So
Yep.
before we get to that exact thing, because this whole podcast idea started with you actually sending me a message on WhatsApp and being like, what the hell? So like, we're going to talk
Yes.
about that. But before we do that, can you please, just for context for listeners, explain what it is you do for your day job?
Yes. So I am the founder and CEO of Bloom Money, blooming like a flower. There's so many
Yes.
blooms out there.
There
So
are a few. You're my favorite, though.
thank you. We do own the trademark in the UK at the very least. So Bloom Money is a B2C fintech company serving immigrant or diaspora communities. Very much in a different way than the typical neobank play, where we've seen a lot of that, especially in the States, where it's kind of an obvious market, as we have such a large immigrant community in the US. But one of the exciting things about Bloom is we are focused on the UK and Europe and the increasing immigrant communities that are growing across the region. And we are not focused on remittances and sending money away, but rather we are focused on the 118 billion pounds of purchasing power that no one seems to want to build for, and building interesting savings, credit, investment products is really our jam. So that's my day job. I feel like I have to preface that because the conversation that we're going to have is going to confuse people and be like, what is she talking about? Why are we talking about fraud and all that? But
Yes.
I
Well,
am a
and
fintech nerd as well, and so these things.
that's the thing. That's the thing is we're this is Nina's fintech nerd hat, not her Bloom Money hat. Although
Correct.
there may be some crossover at some point, but yeah, this is literally just her and I going back and forth on WhatsApp and going like, "What's up with this? What is happening?" So Nina, maybe you can start. You sent me a message. Can you give us the context for the thing that you want to have a little therapy session around today?
Yes. Okay. So I texted you, and I actually have the WhatsApp in front of me right now on Friday, September 20th. And I 9:48 a.m. for me. So like clearly I'd woken up and was like upset.
Yeah.
Mate, have you seen this infinite money glitch trend on TikTok? We must discuss. And
Yes.
and then a few messages later, in all caps, first party fraud. The shit I have seen. Anyways, that's where it started, and then there's as our conversation goes on, there's like, beginning of October, we touched on like Revolut and Meta and the issues that they're having with stuff here in the UK with our authorized push payment fraud situation that's been on the rise. And I think what I am really interested in is, one, what is happening and why is there this behavior where we're seeing first party fraud being encouraged and even shared? Do people realize that it's first party fraud? And more importantly, for us that are, the fintech nerd community, those of us that build fintech products. Oh my God, sorry. Let me just put my do not disturb on. Um, More importantly, what does that mean for us as a community that is building fintech products? And how does this affect the way that we build products, the way that we communicate with end customers? And what does it mean for the wider ecosystem when people are being encouraged to engage in first party fraud?
Yes. So this is a topic which I don't know if you could have had any way of knowing this when you texted me, but this is a topic I'm obsessed with because I've seen it, and I think it's hard because there's almost this reluctance to talk about it, at least in kind of fintech nerd circles a little bit. I first noticed it when I'm sorry, not Chase, Chime and PayPal and Cash App and a whole bunch of these neobanks were adding lots of users kind of during the pandemic. And there was this sort of undercurrent that was kind of subtly being unreported, but like people knew was happening, which was there's this huge rise in like fraud and disputes, and I'd have people calling me going, "Hey, like the number of Reg E disputes that are getting filed that we don't think are legitimate has exploded in the last like 6 months. Like, what the hell is happening?" And it turns out that a lot of those neobanks, because they were pursuing top line growth from a numbers perspective, were onboarding tons of users and kind of allowing them to get away with whatever they wanted, right? And there's lots of ways to game various payment systems, right? Like in the US, because our ACH system has a 2 to 3 day settlement window. You can put funds in, you can withdraw funds, you can write bad checks. There's lots of ways to sort of move money around and game the system. And historically, banks would clamp down on this behavior, right? So we have entire consumer reporting agencies in the US that are solely composed of lists of people who've basically misused checking accounts, right? And if you're on one of those lists, you're going to have a very hard time, at least in the short term, getting a new checking account open because banks would essentially blacklist you if you committed first party fraud. Um, Fintech doesn't do that. And as a result, that type of behavior flourished in a lot of these platforms. And it's not the only place that we're starting to see that behavior. So, Nina, I wanted to run through a bunch of different examples that I think sort of fit broadly in some senses into this category of sort of this change in consumer behavior around fraud. And then at the end, I'd like to try to tie as much of it together into a rant or therapy, or at least trying to figure out how we feel about this at the end. Does that sound okay?
Perfect. Let's do it.
Okay. So the first one, which is the one we started with, the one that you texted me about, is the infinite money glitch. So this was right around Labor Day this year in the US. Word started to get around on TikTok about a glitch, and I put glitch in air quotes if you could see me,
Hmm.
relating to the way that Chase's ATMs were working. And essentially, what a few folks discovered was that you could deposit a check and withdraw a significant portion of the funds immediately rather than the holding period that typically exists for a few days where that check needs to clear. And so essentially, because of this glitch that existed on Chase's systems for a brief period of time, you could essentially overdraw your account significantly, right? And
Hmm.
so this started to go around on TikTok and other sort of social media channels. The TikTok algorithmic feed kind of did what it did when something popular is emerging and just sort of spread it around at hyperspeed around the internet. There were lots of posts of usually young people posting these massive negative balances on their bank accounts and saying, "Look how much money I withdrew, so much more money than I had." I saw one particular story about a couple that pulled $21,000 out of their checking account, which was significantly more money than they had in there.
Hmm.
And for a brief period of time, they had free money. Now, of course, it wasn't free money.
Yeah.
The Chase doesn't get to be the largest bank in the US and one of the largest banks in the world by allowing this kind of stuff to just happen. Obviously, they know all of these customers because they had to log in to the ATM. They had to use their debit card. They had to enter in their PIN number. All Chase ATMs have security cameras. So Chase has pretty good data on all the people who tried to exploit this glitch.
Hmm.
And Chase has been working to get all of their money back, including in some cases getting law enforcement involved where
Hmm.
necessary. And Chase's position, which I don't think is unreasonable, is that this is check fraud
Hmm.
and check fraud is illegal. Now, what's been interesting is watching the sort of reaction from consumers around this, right? And this is what I want to get your take on, Nina.
Hmm.
The reaction from various users was somewhere between, I would say, sort of chagrined and sort of outright confused, right? And so on the
Hmm.
chagrined part of the continuum, it was, yeah, okay, like I know this isn't my money. Here you go. I'll give this back.
Hmm.
And on the other end of the continuum, being truly bewildered, which is, no, I mean, TikTok said this was a glitch. Like, I'm getting my money for free. What are you talking about?
Hmm.
I can't give you this money back. In fact, the couple that took the $21,000 out within like the 48 hours between when they did that and when Chase contacted them trying to get the money back, they'd already spent 17,000 of it,
Oh my
which
God.
is crazy. That is crazy. And it kind of suggests two things to me. One is that they definitely don't have the money to give that back. And so they're going to have to come
Hmm.
up with some type of plan, hopefully working with Chase in a proactive way and not getting law enforcement involved. But they're going to have to work with Chase and the authorities to pay that money back because it's not theirs. But the other thing is, if you pull $21,000 out of your account that you don't have, and then within 48 hours you spend 17,000 of it, you can't really tell me with a straight face that you had no idea that that wasn't your money.
Yeah.
You knew you were getting some kind of deal here that you shouldn't have been getting. And so I guess my question is, why do you think this spread around the internet like wildfire? And what do you think of the sort of aftermath of people kind of reluctantly or maybe in a confused fashion trying to get the money back to Chase?
Yeah, I think we both agreed that neither of us are fraud experts, but I'm
Yeah.
very fascinated in this from a sociological perspective.
Yeah.
And I think what is beautiful but also dangerous about TikTok and
Mm.
social media in general
Hmm.
is you've got this like fire hose of content
Yeah.
which is not vetted.
Hmm.
It's we talk about it's almost the election in the States, 25
Hmm.
days left. We talk about
Hmm.
misinformation, disinformation. And now with generative AI, there's even more opportunity for deep fakes and all the rest of it. And we've never had, I think, this much access from a financial services perspective where something can go viral
Yeah.
and this behavior that is being uh, advertised or talked about,
Yeah.
people will just take at face value and believe it to be the truth.
Hmm.
And I think what's interesting is I went down the rabbit hole and I tried to find the original few posts because
Yeah.
there's probably like a few that first went out, and
Yeah.
the nature of the videos is very much like, hey guys, you won't believe what just happened. Like I
Mm.
just wrote wrote a check to myself
Hmm.
for 20 grand
Hmm.
and I deposited it into my Chase account and then
Hmm.
I just pulled all the money out. Isn't that crazy? And people are like actually genuinely like, isn't this wild? Like, what a funny,
Mm.
crazy, quirky thing that I found.
Totally.
That's
Yeah.
how it started. And so I
Hmm.
think when you have people on the other end going, wait, hang on. So this is fraud. What do you mean?
Mm.
They almost are like, oh, it was just like a quirky, fun thing that happened. Like all of
Yeah.
these TikTok dance challenges, except for now it's crossing over into the world of financial services, which is
Yeah.
also a highly regulated space. And so I think one, everyone loves the idea of free money.
Totally.
Now, in my house, my father famously always said to us, "There's no such thing as a free lunch. There's no such thing as free money."
My father said that so many times growing up, it was insane. I was like, could you not say that anymore? But like, it was just beaten into my skull. Like, there is no such thing as a free lunch.
Correct. And that is something I take with me everywhere and in every interaction that I have to this day.
Totally.
But I think many people are are hopeful that, maybe this is a thing that just like quirky random thing that happened. Or
Hmm.
what also just suddenly made me think about this is, do you remember the crypto craze and like
Oh, I
NFTs?
remember. Yep.
Do you remember the airdrops? And
Yes.
people were like being dropped cryptocurrency. And
Yeah.
I would actually be very interested to see if there is a significant overlap in that Venn diagram of folks who
Hmm.
thought like, "Oh, this is just a thing, like this money
Hmm.
is given to me," and folks who back in the heyday of NFTs were receiving these airdrops and like, "Oh my god, this is free money. This is fantastic."
It's amazing. Yeah.
I think there's something there in this idea because we've seen it as well. My good friend Benji from Nala
Hmm.
Money, um, every once in a while he's like, "I'm gonna send someone, who's using Nala like 20 pounds or something, or
Mm.
like Naira or whatever."
Hmm.
And they'll do these drops
Hmm.
of like cash gifts to
Hmm.
people. And so I think we're in this really interesting universe right now where when that overlaps with TikTok, where you have non-financial experts saying,
Hmm.
"Here's this random thing that I found and it seems too good to be true," people go, "Well, it could be legitimate. It could be
Yeah.
someone is just giving us free money." Now, I don't know how you get it in your head that $50,000 is free money that you're just gonna get,
Right.
but I think I'm trying to understand, like, what makes you believe that you can have that money without ever working for it, or having a loan construct behind it or anything like that. I think there's a lot of people who, let's face it, the economy is kind of coming back to life a bit in the States, which is great. We in the UK are still battling a cost of living crisis.
Yeah, for sure.
People are feeling the the pinch.
Hmm.
And so I think there's also this like hopefulness, or even on the other end of the spectrum, a bit of bitterness towards
Yeah.
the financial system, like very
Yeah.
much like post the financial crash, like screw the banks, they did this,
Yeah.
so I'm going to take all the money. It's very like Mr. Robot, right? Like stick it to the man
Hmm.
type of thing.
Hmm.
So I'm trying to reconcile all of those things, and I would love to see, like, I doubt that Chase is gonna share that data with us. I would love to see the demographic of folks who did this.
Yes, I would too. And I do think, I mean, you put your finger right on it with crypto, right? Which is, we just went through a phase and it was to some degree probably a ZERP era phenomenon in terms of where the money
Mhm.
was ultimately coming from. But we saw this with crypto. We saw this with NFTs, which like NFTs in particular are amazing. Like as soon as there was no more free money, the market just died because there's zero utility associated with it. And
Mhm.
now the big topic in crypto is like stable coins and infrastructure and cross-border payments between correspondent banks and like the stuff that is like not retail crypto at all. But if you go back to 2021, there was this notion that like, yeah, this is a new form of money that you can just kind of have for free. And like I would imagine the mania is somewhat similar, not that we can jump in a time machine or anything, but like to like the American West when people were like moving out to California to mine gold. Like there's like
Yeah.
there is a once in a generation opportunity for
Mhm.
you to be wealthy without having to do the things that normally are associated with becoming wealthy is I think kind of the mentality. And I saw that a lot in 2021, and not just with crypto, right? We saw it with stock trading. It's the same
Mhm.
thing, right? It wasn't, the usage of Robinhood was not oh, I'm going to get a whole basket of different stocks in a very diversified way, I'm going to hold them for a long period of time. It was trying to use the stock market as a gambling device in order to speculate and to try to strike it rich. And so
Mhm.
I think we saw that behavior. And the thing that I'm finding disturbing, I think, is in 2021, there were lots of mechanisms that were sort of being pushed on people to try to like gamble and to do that. And then when
Hmm.
interest rates went up, a lot of those mechanisms, the money was kind of pulled out of them, right? Because investors don't want to lose money on things that don't actually generate value for too long.
Surprise,
And
surprise.
yet, surprise, I know. And yet, the consumer behavior and the consumer expectation of behavior seems to have sort of lingered past that, right? And so I'm
Hmm.
wondering if part of what we're seeing here from a psychology perspective and a behavioral perspective is the hangover of consumers being told in 2021, hey, we are in a period where you can make generational wealth without having to do the things that are normally associated with that. And you shouldn't
Hmm.
feel guilty about it. It's not a scam. It's not fraud. Like, this is your chance. You should seize your opportunity. And then, even though some of those industries have sort of, lost funding and have kind of gotten smaller since interest rates went up, the message we told consumers is still stuck in their heads. And I'll give you another example of what I'm talking about here.
Hmm.
So, there was a story in the Wall Street Journal fairly recently that was
Uh-huh.
talking about the rise in disputed credit card transactions, chargebacks,
Mm.
right?
Yep.
And as anyone who's worked in payments knows, and you've worked in payments,
Hmm.
the card networks have gone to an extraordinary lengths over time to make credit cards feel very safe to use, right?
Hmm.
And
Yep.
particularly as we were moving into online commerce, there's this idea that if you type in your credit card information and you buy something, and for whatever reason the transaction doesn't go your way, you don't get what you paid for, it's substandard quality, you never get what you bought, turned out to be a scam, whatever, you are not liable for that. And you
Yep.
can initiate the process of charging that back. The impetus for dealing with the chargeback sort of falls on the merchant to prove that it's not true, and the impetus is on them to sort of demonstrate that. And the whole idea is to make commerce feel safe.
Hmm.
The idea is not to allow you to just charge things back if you don't like what happened or if you just decide you want a little bit more money in your pocket, right? So there's this gray area with chargebacks where it really was never intended to be a mechanism of, yeah, I got exactly what I paid for, but I don't like this company, or I just found out something about this company, or the product is exactly as advertised, but I don't like it. So instead of returning it or having to deal with the merchant or whatever, I'm just going to charge it back. Or, you know what? If I charged it back and just kept the item, I might be able to just keep the item and get my money back. All of that falls in this sort of, again, continuum of first party fraud ish type behavior. And what was interesting in this Wall Street Journal article is it was saying that consumer chargebacks have exploded in recent years. So it said consumers have disputed around 105 million charges with U.S. card issuers last year, so 2023, worth an estimated $11 billion. That's up from 7.2 billion in 2019, and researchers forecast a 40% rise in that figure by 2026. And interestingly, if you talk to folks who work in the payment space and deal with chargebacks on a regular basis, a large percentage, perhaps a majority or a vast majority of those chargebacks are friendly fraud.
Mm.
Again, somewhere in that continuum of I got what I paid for, but I didn't really like it, so I'm just going to do this, or I'm going to pretend I didn't get it when I actually did. I've seen estimates that up to 75% of chargebacks are friendly fraud. So
Mm.
again, Nina, there's this other example of there's this mechanism that has existed for a long time for doing chargebacks. The card networks, issuers, they all say this is a last resort. First, please try to work it out with the merchant. Like, this is not something to just be easily done. But as we've made it easier, as we've built it into like mobile apps for card issuers, as we've sort of made consumers more aware of what their rights are, which generally is a good thing, I think, the consequence is there's this growing trend, seemingly, of people just hitting the easy button and going, no, I don't like this. I don't want this. I don't think I should have to pay for this, blah, 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 and just
Hmm.
hitting that button and again, committing first party fraud. So it's another one of these examples.
It's interesting. So I actually don't spend much time on TikTok, and people are quite surprised by that. I just have a lot of other stuff on my plate at the moment. But every once in a while, I'll have a scroll, and I remember I should have taken a screenshot.
Hmm.
Beautiful young woman in the States who was saying, "Here's this trick that I found.
A
I
trick.
went shopping.
Hmm.
Um, I've bought all these things. I've worn them. I've taken the tags off and everything. And um, I called up the bank and I said I didn't make those transactions. Those
Hmm.
weren't me.
Hmm.
Um, And I said, it's fraud. And
Mm,
so they returned all the money.
mm,
And I had to scrape my jaw off the floor
totally.
because she was saying, here's this cool trick and you should try it too. And when you
And
read the
again,
comments,
same language, right? Like trick, glitch, hack.
hack. Yep.
These are all synonyms. These are all gentler ways of saying fraud.
Fraud. Oh, absolutely. And so I think you're quite right. There's also this almost like we have we have let the end customer consumer believe that they are always right. We
Hmm.
in the name of increasing commerce, we have made it so easy for them to always be right.
Yep.
And so they do get away with it. And
Yep.
then people go, and then now on TikTok, we have this huge amplifier where people
Hmm.
go, "Hey, here is this silly trick that I tried and it worked for me. You should try it too." And
Yeah.
it's interesting because I actually initiated a chargeback on some goods that I received, which were completely just like the quality was
Hmm.
terrible, not what I ordered at all. And
Which is
it was on my
what
Amex.
chargebacks were actually invented to do.
Correct, right?
Yeah.
And Amex has me jumping through hoops for it, like
Yeah.
uploading photos, documents. Like I'm out here writing letters citing the Consumer Credit Act right now just to get that through because I think they are starting to feel burned by this, right?
Totally. Totally.
The other interesting thing is, in my previous life, I worked for Klarna briefly,
Yeah. Yeah.
and we talk a lot about, I'll do some of these like GLG calls or whatever. Someone's always trying to do buy now, pay later for like concert tickets or
Mm.
travel and everything because you tend to see like higher basket value.
Hmm.
And one of the really interesting things is when I was at Klarna, the way that it works is you would what is the right way to put this? Your repayment. It's not, well, it is loan, isn't it? I
Yeah.
don't know
Yeah.
like what
Sure.
the right word.
I think it is, but
Yeah.
BNPL companies would disagree probably.
Right. So your exempt credit
Hmm.
payment plan, let's call it your installment payment plan,
Yeah.
would begin at what we call capture. And that was the moment that from the ERP side of the
Hmm.
merchant, they have acknowledged that this order has been placed and they've
Hmm.
now like created a ticket for it. They've got the shipping label, everything's set up. Because the thing is, we would often see folks trying to say, "Oh, I never received it." So they'd come to Klarna and say, "I never
Hmm.
received it.
Hmm.
So I'm going to cancel. I want to cancel my installment plan."
Hmm.
But this is why it was so important, especially for Klarna, to then integrate with these ERPs to better understand actually, has this item actually reached the person?
Right.
These
Right.
integrations, there was an integration where it was kind of like, hey, give us access to your emails. And under the guise of like, oh, you can see like in your Klarna app now
Hmm.
where your delivery status is.
Hmm.
What was very helpful for Klarna was actually this thing is on its way to you. So don't
We
try and
know
pretend that it
it's
never got to you.
right, right, right. Yeah, we
Exactly.
see the last little bubble in the like where is my package thing. Like that last little bubble is filled in. It got to your door. Like don't tell me you didn't receive it.
Correct. And that's why it's been so interesting with BNPL trying to expand into events, into ticketing and
Mhm.
stuff like that. Because actually, how do you prove
Mm.
if something happened? I mean, like, it's a lot harder to be like, oh, yeah, the Taylor Swift concert didn't happen. So actually, I mean, in the
Right,
case of
right.
like in Austria, it literally did not
It
happen,
didn't
right? So
happen.
that's
Right,
fine.
right. Mhm.
Um, but that is a really difficult one. And how do you actually balance, oh, this was not what I expected, or my flight, my Spirit flight was not the first class Singapore Airlines experience that I wanted. Well,
Right.
like, yeah, no shit, it's Spirit. No offense to Spirit Airlines, but you know, it's a really interesting one to keep in mind when we think about the products that we're building in fintech around that. And I think even with Chase, I go back and I don't know if it was a glitch or not. Part of me actually, when I first saw it, went, "Oh my gosh, wow. Chase was probably trying to do this like nice, good thing."
Oh, sure. Like make money available faster.
Yeah, the way I saw it was like they're like, "Oh, okay," like, they were almost effectively, like, giving you a float, right? Where they're like, "Yeah, and then we'll check it out later."
Yeah, like in response, it's a good point, right? Because the way that I think fintech pushes on banks is to say money should move faster, right? Like money should move faster, people should have
Mhm.
access to it faster, and it's going to be only good things if we move money faster, right? So like a good example of this is Chime advancing your paycheck 2 days early, right? And
Mhm.
so there's been this sort of push to say like, look, if the money's deposited and we think the funds are good, you should advance them right away and take that float risk. But to your point, I wouldn't be surprised if some version of that idea was kind of at the root of what happened with Chase here. And it's not the only one, right? Because the other story that I wanted to talk about is everything happening with scams, right? And
Yes.
payment related scams. And you being in the UK, you guys have been ahead of us in the US on this. But just from a US perspective, essentially what happened is the banks all got together because they didn't like the idea of people using Venmo or using Cash App or using these other apps rather than using their bank to move money. So they got together, they built Zelle, and they made a choice in building Zelle, which blows my mind even to this day, which is we are going to make all transactions on Zelle real time by default. In fact, there's no way for them not to be real time. And like again, we're responding to this pressure we get from fintech to try to do this thing that we think is kind of what consumers want, right? And there certainly are examples where you do want the money to move in real time, right? Like if I'm paying my rent and my landlord literally needs it in his account tomorrow, I need this money to move in real time.
Yep.
I have always felt as though if it's really dire for the money to actually be there in real time, that should be a step up option that we present to you and maybe that we even ask you to pay for. I know that's insane, but
Mhm.
like maybe you pay $1 or $2 to move the money in real time. But the more
Yep.
important part of moving that money in real time is uh, if I'm making that choice, I'm probably pretty sure that the party I'm sending it to is the right party. And I might
Mhm.
even double check to make sure because I'm paying money. I'm making this explicit choice to send the money in real time. The money's moving. It's going to be gone when it gets there. There is no recourse to get it back. We jumped over that whole hurdle with Zelle and just said, nope, all the money is going to move in real time by default. We know that no consumers are used to this or have ever had access to a tool like this before, but that's what we're going to do.
Mhm.
Surprise, surprise, scams have exploded in real-time money movement in the US as we've sort of taken our first steps into it. There's a dozen and one different scams that are being run at any one time to
Mhm.
essentially try to convince consumers to authorize a transaction where they're sending the money, again, in real time, often
Mhm.
to scammers and then not being able to get it back.
Mhm.
Um, we call them scams in the US because if the consumer authorizes it, it is not protected by the same ability to dispute a transaction and get your money back as it would be if you didn't authorize a transaction. And that's a
Mhm.
big distinction that exists within Reg E and the Electronic Funds Transfer Act.
Mhm.
So we have this problem, right? And we're not the only ones. Obviously, authorized push payment fraud is a massive, massive issue in the UK.
Mhm.
And the thing I'm curious about is what do we do here? Because again, there seems to be this sort of confluence of different things that are happening. On the one hand, we are using the internet and we're using digital technology to give access to a thing that people have never had before, which in this case is like real time money movement.
Mhm.
We are allowing consumers to use those tools while also interacting with each other in different ways, right? So I know a ton of people who I've met on social media platforms who I've never actually met in person. I can't say with 100% certainty that not all of them are like good people, right? So, like, we are connected via digital technology in a way that we just haven't been historically. And money movement is now part of that infrastructure.
You and I have never met in real life.
That's so true. We've never met in real life. So, like, I assume you're not trying to run a long con to separate me from my money, but I don't
Oh my
know
gosh,
that for
amazing.
sure. So,
I
like, yeah, when we end this
That's
podcast and you're
hilarious.
like, "Oh, by the way, I need you to wire me
Yeah,
some money,"
exactly.
like, we'll
Alex,
know
I'm
what
in
was
a
actually
lot of
happening.
trouble. I need you to help. Yeah.
Right, right. Like, is this even Nina? Or are you like a generative AI like hallucination that's happening? But like, this is the world we're living in. We've tied that
Mhm.
world to real time money movement, and then of course there's this question of did the consumer authorize it? Did they not authorize it? Did they authorize it and now they're saying that they didn't authorize it? So again, there's this sort of first party fraud versus third party fraud question all getting mushed together. I get a lot of questions about what you should look for when choosing a fintech partner bank. And at the top of that list are security, compliance, and operational resilience. As you know, I'm a huge advocate of building and scaling products responsibly. Nothing grinds my gears more than when companies move fast and break things. With Newline by Fifth Third, you don't have to sacrifice anything. You get the innovation of a modern developer platform with the stability and compliance competency of a leading bank. With an API-first platform, Newline enables enterprises to launch and scale payment, card, and deposit products directly through Fifth Third Bank. No annoying or expensive middleware layers to go through, just a secure and direct relationship with Fifth Third Bank. Find out more about Newline by visiting newline53.com. And Nina, the thing that is capturing my attention right now is in the UK, we just had a new rule go into effect, as I understand it, that
Mm-hmm.
requires banks and payment companies to essentially reimburse consumers for scams up to, I think it was like, is it £85,000?
Yeah.
Am I getting that
Yeah.
right? And that, which
I
is
think
about
that's right.
111,000
Yeah.
US dollars, which is quite a bit of money, actually.
Mm-hmm.
And for that reimbursement, again, for scams, right, where it's authorized by the consumer, but it turns out to be a scam.
Mm-hmm.
And for that reimbursement to be split 50-50 between the sending institution and the receiving institution.
Mm-hmm.
Um, I would like to get your take on this because my understanding from having followed it from a distance is
Mm-hmm.
that when this rule was initially proposed, the limit was a lot higher, first of all.
Mm-hmm.
And second of all, banks and payment companies uniformly flipped out about it
Yeah.
and did not want to do it. They got the limit lowered, which I guess is a victory, but it's still in effect.
Mm-hmm.
And a lot of the infrastructure for like, how do we get the 50-50 split? How do we communicate what's happening with the dispute to the other party? Like a lot of that
Mm-hmm.
infrastructure is pretty nascent or doesn't quite fully exist yet. It sounds kind of chaotic and crazy to me, but like what's the boots on the ground
It
take on
is
it?
it is so chaotic. And actually this was the other thing that I sent you
Yes.
randomly.
Yes.
Which was Revolut. I think the headline is like Revolut slams Meta for their lack of
Hmm.
attention to APP fraud, app fraud, which is authorized push payment fraud.
Hmm.
So that is what we refer to it as in the States, in the UK, sorry. And the payment systems regulator has brought forth, as of Monday, so the 7th, 3 days
Yeah.
ago, um, this new ruling. And it's been really interesting to me because I've received emails from my bank, from
Hmm.
Starling Bank. I bank with them, with Oak North, where my savings are, with all these like fintech accounts that I have floating around, kind of going, okay,
Hmm.
here's what we're doing. Here's how we're thinking about it. Now, it's not funny at all, but I remember a while back,
Yeah.
someone in their newsletter wrote about, it might have been you actually. Revolut was asking people
This
to
was me.
basically, yes, it was you, yeah,
Hmm.
send in videos of themselves,
Yeah.
basically saying like, I have been made aware that this is likely a scam, but I would still like to make this payment.
Holding up a sign. They made
Holding up
him
a
write out a
sign.
sign and take a picture or video going, I realize that Revolut has warned me this is a scam. I'm unlikely to get my money back. And before the transaction can be authorized, they had to submit that to Revolut.
Correct. And I thought it was, I mean, it's not funny at all, but I thought it was hilarious.
It's
Just
the
like,
funniest thing ever. Yeah.
it's like you're making your customers basically like do a hostage video.
Totally.
And it's just really like, it's really crass. It's a poor user experience.
Well, from a
But
PR perspective, it's like suicide from a PR. Like
yeah,
the PR people there must have been losing their minds about that decision.
like that product manager really was like willing to die on this hill because they were
Totally.
like, no, 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 we're not, we are
Right. Right.
not messing about with this. But
Yeah.
I also empathize because if you are, Revolut is now a bank, if you are the
Hmm.
bank that is on the opposite end and you're going, hang on, like, these romance scams are so
Yeah.
uh complex and so um well targeted and so
Mm-hmm.
realistic now,
Mm-hmm.
right? That they're doing the best that they can to protect their, well, what they need to reimburse you, but to protect your money, and
Mm-hmm.
you're still wanting to do it. I think there was a big report about romance scams. Like that tends to
Yeah.
be a very kind of like Anna Delvey type of, what was that
Yeah.
guy? Wasn't there a Netflix documentary where the guy kept being like, "Oh,
Yes.
my enemies, like send me
Yeah.
money."
Yeah.
And I think what's really interesting about this is we again are like in this brave new world where it's easier than ever to scam folks, right? Like
Mm-hmm.
maybe not, maybe we have a bit of the uncanny valley still, thank God for deep fakes. So you're not going to be able to be very, very convincing with a deep fake kind of video or something.
Yeah.
Um,
Although that's just a matter of the technology not quite being ready. Like it's going to get
yeah,
better. We know it will.
we know it will. There are, you could basically with AI now basically generate very tailored CRM of like, here's everyone I want to target, and let's do a tailored
Totally.
outreach and pre-populate that. So we need to match that fire with fire in some way. And I was speaking to Nikki Galimas, who is the one of the co-founders of Nova Credit and is now
Mm.
building Tunic Pay in the
Mm-hmm.
UK. And she made an interesting point, which was, you know, how do we balance this from a product perspective? Because right now, whenever I make a payment in the UK, and we have faster payments, right? So it is
Yeah. Yeah. Yeah.
instantaneous.
Yep.
I am being asked either to input my password or I get this roadblock screen with
Mm-hmm.
all this red letters like, do you know this person? And they make you like, if for business banking even, I'm paying an invoice, like I'm
Mm-hmm.
aware that this could be a scam. It's
Mm-hmm.
very like jarring and red,
Yeah. 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 Yeah.
and I'm having to put in my password or I'm having to click, yes, I understand that I won't get my money
Mm-hmm.
back and all of that,
Mm-hmm.
which is actually desensitizing me to
Yes.
the wider problem here, which is cool.
Yeah.
I'm just putting in my details now because I know that this is just another roadblock for me to make my payment. So
Well,
how do we?
it's like the change you guys made where in Europe where it's like, acknowledging cookies, right? Where it's like every website pops this up every
Mhm.
time, and like we were desensitized to it. You just click yes. You don't even
Yeah,
like, what does this mean? Nothing. Boom. Done. I'm moving on.
yeah.
You're in the way of my transaction.
I agree, and I think we made a pretty good leap with confirmation of payee in the UK,
Mm.
where now you can match, and that was something that the banks definitely all quickly rushed to sign up for
Oh,
because
sure.
they're
Yeah.
like, yeah, cool. I get it's a match, like the details match
Mm-hmm.
who you think it is. But wouldn't it be very interesting if on the other side, let's say you are about to be the victim of an app scam where you've bought something on Facebook Marketplace.
Mm-hmm.
And wouldn't it be great if actually there was a service that was like, actually, these images that are generated, have been used elsewhere X number of times, or even from
Yeah.
confirmation of payee, you know, a lot of new accounts have been sending, or a lot of accounts have been sending money to this newly formed account recently of the same volume that you
Mm-hmm.
are, and this is
Mm-hmm.
suspicious, and we're going to flag that to you. But I do think that there's something. I get it. I really empathize because now you as the bank or the marketplace are bearing the brunt of this. I get why they're pissed. I also just think like we have made it so easy and fast for people to get their money. I used to chuckle back when fast was a thing because
Mm-hmm.
I do actually believe there needs to be a level of friction in payments. I
Slow
know,
is nice.
shocker.
Slow is safe. No, I mean, it's funny you say
Like, it
that,
doesn't
right?
need to be
Because like,
chap slow, but
no,
like,
no, no. But I couldn't be more with you. I mean, I always go back to like Zelle just jumping us forward in the U.S. to real time payments without any. No one even asked for this, right? Like, I mean, like literally, like no one wants this. No one asked for this.
yeah,
we are all now real time by default. Obviously, we're behind you guys, but like
Mhm.
we're rolling out Fed now. We have RTP. Like we have these real time
Welcome to
payment
the future.
networks. I know we're very excited. Thank you. Uh,
It's
so
great.
tell me more about this internet thing and the ability to move money instantly. This is fascinating. You mean it's just numbers in a ledger? This is crazy.
This is crazy.
So we're rushing into this world, but I do find a lot of times it's like that Jurassic Park thing where it's like you spend so much time thinking about if you could, you didn't think about if you should. And
Correct.
I have this all the time with the speed at which we do these things. And again, the interesting thing to me is all of these things are colliding at the same time. So again,
Mhm.
from if money can move instantly, if money can
Mhm.
like move instantly, well, what do we have to do? Well, we have to make it safe. We have to make consumers feel safe, which means we
Mhm.
have to give them mechanisms to dispute, to get reimbursed, to object, to do a chargeback. Okay, well, now we've done that, but wait, the same technology that's allowing consumers to conduct commerce instantly also allows them to share tips and tricks with each other about how to exploit those mechanisms that we just gave them to make them feel safe. And so now we're seeing this huge rise in first party fraud. What do we do about that? Oh, well,
Mhm.
now we implement more stringent safeguards and ways of preventing people from being scammed or from committing first party fraud themselves. Well,
Mhm.
how do we determine when it is a scam and when they're committing first party fraud? Like, oh, I don't know. So, I mean, it feels like we've jammed all of these things together and we haven't taken the appropriate amount of time to figure that out. And so, like, you guys in the UK are doing this reimbursement thing. I don't know. I mean, I do you think it's possible that we will see a significant uptick in disputes that magically fall right under that 85,000 pound threshold? Do you think it's
Yeah,
possible that we might see that? Because like now we know there's a number under which they are required to reimburse you. Like that would
I wouldn't
sound
be
like a
surprised
good
at
thing
all.
for both friendly fraud and for third party fraud and scams.
I would not be surprised at actually, 85,000 is so that's our FSCS, FDIC equivalent kind of threshold as well, so it is
Oh,
very
interesting.
interesting.
Mhm.
Um, I would not be surprised if with this underway it's only 3 days in, right?
Yeah.
But I would not be surprised if we start to see, some very clever engineering here for people to perhaps get to double dip, right? And even you and I
Yeah.
could send a payment to each other and go, "Oh yeah, I was scammed by Alex," and like,
Right, right, right. And
reimburse
then like
me
yeah,
funds.
my bank pays half and your bank pays half and we walk away
Perfect.
perfectly happy.
Yeah, and so I
Yeah.
think it I wanna turn the question around to you though, because
Yeah, please.
to to what extent does the onus fall on the customer? Because we
Yeah.
are very much in the name of commerce always saying the customer is always right, they can do no wrong.
Yeah.
But in this case, there are now exceptions where the banks can actually, hold a transaction, right?
Yeah.
Um,
Right.
and that's gonna get annoying for people, right? Especially for us where faster payments already exist, and so we are
Mhm.
expecting it to be instantaneous. It'll
Mhm.
be very interesting, like, I'm fascinated for the implications in a cross-border world. Like,
Yeah.
I will often use Wise, for example, right, to send money
Mhm.
to the States.
Mhm.
So what happens, like, once that money has left the UK? Like, what happens there? And, like, does my is my bank going to be liable for that now that it's left the
Mhm.
country?
Mhm.
There are wider implications as money moves faster around the world, not just within our domestic bubbles.
Yeah.
So to what extent do we need to actually, I don't know, educate the customer, put like, I don't know, do they need to touch the fire and get burned and learn that they've been scammed and, like, sorry, like, sucks to suck, like, you saw all
I so
the
I
blockers.
Yeah, I mean, I think we do, right? I mean, I think that unfortunately, and again, like you see this in every aspect of what we've done from a financial services perspective. Like, we want to make it easier for you to conduct commerce. We want to make things frictionless. We want to make things faster. From a
Mhm,
regulatory perspective, I think there's this idea, and we have. You guys have the FCA, we have the CFPB, but there's very much this idea of like pro consumer regulation. Like the
mhm,
consumer's always right. We want the consumer to be in control of everything. But the flip side is we don't have the same expectation that consumers should have to bear the costs of their own decisions, right? And
mm,
you see it everywhere. in the US, I mean, even things like we had uninsured deposits at Silicon Valley Bank, right? That
Hmm.
were
Yep.
probably going to take a while to get worked out. And Silicon Valley Bank had a very large percentage of uninsured deposits. And that was probably pretty reckless treasury management on the part of the customers that were holding money over $250,000 in these accounts.
Hmm.
And, because of, I think, the nature of who those depositors were, because of concerns about the sort of crisis at Silicon Valley Bank rippling into other community banks. I mean, I was glued to Twitter that whole weekend watching the conversation sort of
Yeah.
unfold in real time. And you had like VCs going like, if the FDIC and the Treasury Department don't step in and stop this from happening, and make sure that all uninsured depositors are safe on Monday morning, the economy will collapse, right? Which I don't think
Hmm.
was true. I think that was very hyperbolic, but that is in fact what the Treasury Department and the FDIC did. They stepped in to guarantee all uninsured deposits. Well, that's moral hazard, right? None of those depositors learned
Hmm.
anything about the nature of deposits. It's the same thing with, Synapse and Evolve
Yep.
and the meltdown we've seen in banking as a service. Consumers thought that this meant if it says FDIC on the website, then it's FDIC insured. And so I really struggle with this question because, on the one hand, I do think that it is super beneficial for consumers to learn difficult lessons that then inform the way that they live the rest of their financial lives. Like, oh, I made that mistake. I'm not going to make that mistake again. I mean, I have a
Yep.
hunch, Nina, that both you and I, our fathers probably had those mistakes that happened to them. And that's why they kept saying there's no such
Yep.
thing as a free lunch over and over and over again and drilling that into our heads. So I do think there is a sort of benefit to society of having consumers be more responsible for the choices they make. On the other hand, I also really struggle with what is the appropriate amount of diligence that we can reasonably
Mm.
expect consumers to do, right? And
Yep.
so kind of going to some of these things we've been talking about, like in a banking as a service context, I don't know how a consumer is supposed to parse the banking relationship between Yada, Evolve, and Synapse and know if
Yeah.
their money is actually safe. Like, how are they supposed to do that? There is no
Hmm.
way for them to do that. So, in that particular case, while there is a bit of fault on the part of consumers, there's also a lot of fault around we didn't give them a clear way to distinguish where the risk was here.
Hmm. Yeah.
With scams, where's the appropriate line, right? I was reading a story in Bloomberg about a woman who had her life savings stolen from her over the course of about 6 months by scammers. So it was
Oh.
like $3 million that she had saved up over the course of her entire life, and they drained all of her accounts in like 6 months. And
Oh.
Bloomberg did this incredible reporting to like deconstruct what happened. And one of the things that was so interesting about it was kind of similar to a romance scam. The scammers had convinced her this was the right thing to do. And so she could not be talked out of it. And she would go into Chase
Mm.
and the tellers would say, like, are you sure? Do you know these people? Like they knew it was a scam. But at the end of the day, it's her account and it's her money. And do we want to live in a society where the bank literally says, no, we think
No.
you're being scammed, so you can't have access to your own money? Like, where
Yeah.
do you draw the line there? And so I don't know that I have a good answer because, on the one hand, I do really feel like we've softened a lot of the consequences for consumers in a way that's probably not good. But
Hmm.
on the other hand, I also think we've made a lot of this stuff so complex and so risky that it's very difficult for even well-meaning consumers to navigate this stuff
Hmm.
safely. What's your answer to your own question?
So wearing my Bloom hat currently, and
Yeah.
I've built numerous products at numerous B2C fintech companies before.
Yeah.
What everyone is looking for from financial services more so than I think any other industry is trust.
Yeah.
That is what is very interesting about that is we as financial services providers are expected to earn and maintain the trust of our customers.
Yeah.
I think that's a very important thing. And
Mhm.
clearly, a lot of that trust has been broken, both by
Mhm.
incumbents and by fintechs, sometimes not by not for their own faults in the case of Synapse, for
Right.
example.
Right.
Um, but we do not expect the same from our customers.
That's
And
such a
that's
great point.
isn't that interesting? And
Yeah.
for me, trust is actually a two-way street. when I talk about my relationships with the people I love in my life, with my family, with my partner, with my friends, with you, trust is a two-way street. And so it's
Yeah.
very strange to me that in our industry we are expected, and I never thought I would be voicing this particular viewpoint, but it's strange that we are expected to earn this trust and jump through all the hoops and, you know, communicate on the right cadence and make sure our product is easy to use and transparent and everything, but then we don't expect the same from our customer.
Yeah.
And so I don't know if that means, you have to do a little module. Um, was it is it Republic? No, Public that has done a pretty good job of having little bite-sized intro
Pieces
to
of
investing
education.
pieces.
Hmm.
Is that what we need to do? Do we need to all collectively decide that we're all going to engage in this like consortium of TikTok where we're gonna all put out information, relatable information about what app fraud is,
Yeah.
what a romance scam looks like. But at
Yeah.
the end of the day, you're quite right. Like, I don't want to live in a world where my bank says, actually, Nina, you're being scammed. We're not going to let you move your money at all. Right.
Right.
So,
Right. It should be we trust you and you trust us, and
yep.
we've given you the information and you've
Yep.
transacted and you've made a choice, and we're all going to sort of live with the consequences of that. No, I
It
couldn't
feels
agree
very
more.
like, it feels very, I mean, I don't have children and I know you have a beautiful family. It feels very like, if you're going to drink, I'd rather you drink under my roof type of
Totally,
thing
totally,
where,
totally.
you
Yeah, like
know?
if you're gonna take these initial risks, I would like you to do it within an environment where we can build
Hmm.
trust as a group. No, I mean I always default to like parenting analogies with this stuff, but it really is true where it's like
Hmm.
the hardest thing is trusting another party when you care about them and when there's risk, right? Like that's when
Yep.
trust really matters.
Hmm.
And I do think, to your point, we have sort of lost the thread a little bit around earning trust, right? And
Hmm.
even like when it comes to the relationship that a customer has with a bank or with a fintech company, I like the idea of a mental model that exists where the length of time you've worked with an institution and the amount of interactions you've had with an institution should translate into a greater level of trust on both sides, right?
Yep.
And so, like, why do we treat brand new customers who just came to an institution the same or better in some cases than we do customers who have worked with us for decades, right? Like, if you've worked with
Correct.
me for decades, you have trust with me, I have trust with you, and that means that if you've never submitted a chargeback in the 15 years that we've worked together and you just submitted a
Hmm.
chargeback, guess what? I'm not going to hassle you about this at all.
Yeah,
You are a brand new
exactly.
customer who just came to me. We know from looking at your credit report that you haven't had a lot of credit cards in the past. You have just submitted your third chargeback in the last 3 months. You and I are going to have a conversation about what that means and what that looks like and what chargebacks are actually for. But we don't have that type of model or mental framework. And I think particularly as we go into an environment where competitive barriers have all been lowered, right? Like what I just described used to be the way that banking worked when you worked with the bank that was just down the street from you and you knew the teller and there was a personal relationship. But as we've flattened out financial services, and as everyone is always competing with everyone else all the time for every product and every customer, I think we need to have some new framework that we develop for how you build up that trust over time.
And I think what is very interesting about this, and you've done some excellent reporting in your newsletter about this, about the various fraud consortiums that are being formed.
Yeah,
I love that. That's fantastic. But
totally.
I would actually, I'm really interested in the fact that what we're dealing with in those consortium is someone who is almost purposefully committing fraud.
Hmm.
It's and what we are seeing with this behavior recently is maybe people
Accidental
aren't
fraud.
actually, it's accidental fraud and they don't
Yeah,
perhaps realize that they're engaging with it. So to that
yeah.
point, how are we leveraging our existing data as a financial services institution to be able to make those decisions that you just said, right? Nina, you've been with us for 15 years. You've never once initiated a chargeback. you're good. Like, we've got you. This is
Yeah,
this
yeah,
is
yeah.
fine, right?
Yeah.
Whereas, and we see that at Bloom right now, where we have folks that have perfect payment records, like they've
Mhm.
paid in on time every month, and it's great. And so we are now in a position where if they need something from us, we're like, yeah, of course. Like,
Mhm.
go off, girl. You've
Yeah,
been
yeah, yeah,
great.
yeah.
Whereas
Yeah.
we have people who join on the first day and they're like, I want the first payout. And you're like, well, clearly you're trying to scam us. Like, I don't
Right.
know you. I'm not
Right,
gonna
right, right. Yeah, you
I'm
gotta
not
earn that
going
trust.
to give you that. You need to earn that trust. And so, in a way, perhaps without even realizing it, in my own business, am kind of shifting the dynamic where I am now expecting my own customers to build trust with us.
Yeah.
And I think the key thing here is, if you're a financial services provider, you probably
Mhm.
sit on that data already internally
Yeah.
to be able to form that. We literally call it the trust score at Bloom. Actually, that's so
Right.
funny. I didn't even realize that. We literally call it the trust score. Wow. I just
So
blew
you
my
guys
own
are
mind.
already you're doing this, yeah.
We're literally building it already. Wow. But we have thought about it very much as like, this is an underwriting model for future lending credit products, etc. But also trust score in that, because it's a multiplayer product, it's almost like an Uber rating type thing.
Right,
But
right.
interestingly, we are actually building a trust score for us internally as well, to be like, okay, this customer has been great forever, so we can, make exceptions or
Well,
change
and
things around that need to be changed.
that's exactly, I mean, it's a great way of framing it, right? Because it's like, the other thing I was thinking about, again, in this like flattened out competitive environment that we're in, where I think the incentive, absent anything else, is just go wherever and get the best price and don't worry. Like, I think we're encouraging consumers, and this exists on the regulatory side as well as on the sort of competition market side. We have this model, I think, which is like consumers should be completely portable. They should never be captive to an institution. Like they should be able to
Mm,
move from one to the next, and like there should be no loyalty, right?
mhm,
And I think it is a really interesting model to say, no, look, what we're going to do is we're going to require customers to earn trust with us over time, and we're going to try to earn trust with them over time. But the benefit is to the customer, if you have a good trust score with Bloom,
mhm.
your life is so much easier. Like you never get hassled about things. You
Yep.
never have these problems. When a problem does happen, you get VIP white glove treatment. And I would think, Nina, and correct me if I'm wrong, but the way you guys, I would imagine, think about it long term is, we don't want a customer who's earned a high trust score with us and who has this frictionless ability to interact within our ecosystem to go somewhere else. And we think one of the benefits or the sort of lures we have to keep people is, you spend a lot of time letting us get to know you. Do you really want to
Mhm.
start over brand new with someone else? And I think that that might be a huge competitive advantage, right?
Absolutely. I don't know if you've seen that, like, internet thing where it's like, "You gotta date your wife, dude." And
I think I've written that in my newsletter before. Yeah,
yeah, you gotta
got to date
date
your
your
wife.
wife. And what I'm
Yeah.
saying here, and I know that you've had this rant as well, and I'm like,
Hmm.
"Yes, yes, Alex, 100%," which
Hmm.
is exactly what you said. We court new customers. We give them the best shiny things. We give them all the points, whatever.
Yeah, yeah, yeah.
Why are we not courting? Why are we not dating our existing customers? Like, actually, you have demonstrated this trust with us. Why am
Yes.
I not giving you all the benefits for
Yes.
that loyalty? And in our heads, we're like, oh, loyalty is like, cool, I'm gonna give you a little bit of cash back. Like, that's so
Yeah.
boring. Like, there has to be a different way to approach this from a product perspective. And I think that's what
from
we're
a from a
missing.
pricing perspective, right? Because like I
Correct.
had a when rates went up, I had an account with a bank that was a high yield savings account that was like
Mm-hmm.
0.5% or something pathetic, and I remember not paying attention because I'm busy, and then
Yep.
eventually I was like, yeah, man, rates are pretty high now. I should probably go look and see what I'm earning here. It was 0.5%, and it's like, god damn it, do you not value my business at all? But you're
Mm-hmm.
right. There's this model of take for granted your existing customers and fight like hell to get new customers. And I
Mm-hmm.
think that because of fraud, because of scams, because of this rise in friendly fraud, accidental fraud, the democratization of like, I kind of call it the democratization of shitty behavior, right?
Yes,
Enabled by the
absolutely.
internet. I kind of feel like the model for banks and fintechs is going to have to shift to, the more you know about customers and the like better behaved they are and the trust you've built up with customers, that's what you need to invest in. That's what you need to cultivate. That's what you need to value the most. And for new customers that come in, like, I'm not saying give them the cold shoulder, but like you're going to have to earn your way
Yeah.
to a better relationship with us over time. And that is just not the incentives we have right now, but maybe that's the world we're headed into.
I think what is interesting about this is like I'm like currently closing out our seed round, right? And the VC world is so fascinated in um, what's your churn, what's your retention, right?
Yes.
And what is the ultimate like CAC to LTV ratio?
Yeah, yeah, yeah.
And what is interesting to me is I want the LTV to last forever and ever and ever,
Mhm.
or sorry, the lifetime of my customer to last forever and ever, such that I can have maximum LTV. Right? I've
Mhm.
paid a lot for this customer. Let's make sure that they continue coming back to us. And the way
Mhm.
that I view it from a product perspective is therefore this customer that I've worked so hard to get and activate. I got to make sure that they're super happy so that they continue to stay with us. And I really did expect early days because we have the current account switching scheme here, CAS in the
Yeah, yeah, yeah.
UK, where it's like super easy to just like switch everything, including your direct debits, right? Like to
Mhm.
move bank accounts super easily. And I really did think like, wow, competition is good. This will make us
Sure.
all like step up our game. But I do think there's a complacency, and now we kind of want to like blame external factors for all this fraud and everything that's going on when actually we should be doing the work internally to be building our perfect customers. So, I don't know, we've kind of
Nice.
gone very philosophical there and like from a product perspective, but
No, no, I like it. I actually think doing the work internally to build our perfect customers is a great place to leave it. I actually
mhm,
think, Nina, that despite the fact that you and I hopped on this podcast mostly just to rant and sort of have a
yeah.
therapy session, I think we ended in a pretty productive place. And I very much agree directionally that this idea of building trust with customers and letting that trust be a competitive moat in a world where
Mm,
all other moats are being knocked down
mm.
makes a ton of sense and might be one of the antidotes to some of these disturbing sort of consumer behaviors that we noted earlier in the show. So, Nina, thank you so much. This was a
My
delight as
absolute
always.
pleasure.
Okay, well,
Sure.
we'll definitely have you back soon. But until then, again, thank you very much and stay well.
Be well. Be well. Thanks so much for having me.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.